Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. I will begin covering these new names and review them in future videos. These are the names that have fulfilled up to or more than 70% of their textbook targets. After a quick recap, I will cease coverage on them. Also, I will cease coverage on these names because their chart patterns have been invalidated or did not perform up to expectation. I have put in timestamps, so please use them to skip to the names that interest you. I'm starting coverage on HSBC, Hong Kong. I suspect that it may be forming a rising wedge on the weekly chart. It fell this week, and if it closes below the support trend line, then this bearish pattern is complete. The textbook decline is around 25.75 Hong Kong dollars. Breaking above the resistance trend line will invalidate this bearish pattern. This next coverage is the Malaysian company called Solarvest Holdings. I suspect that it may be forming a double top. Now, price action closed below the 20-day simple moving average, adding to its downside bias. Closing below the support at 2.96 will complete this bearish pattern that has a textbook target at 2.67. Alternatively, rising above 3.23 will invalidate this bearish pattern. Onward to FX, Aussie Yen may be forming a rising wedge. Upside was rejected by the resistance trend line over here, and price action has since diverged from the upper Bollinger. Breaking below the support trend line will warrant a change of outlook to bearish, and the textbook move is 3.9 yen lower from the point of breakdown. Alternatively, breaking above the resistance trend line will invalidate this bearish pattern. Last but not least, in Kiwi dollar, I believe it is forming the opposite of Aussie yen, a falling wedge. Price action has diverged, or rather the last decline didn't even bother testing the lower Bollinger and has since diverged from the lower Bollinger, suggesting easing downside bias. Still, this bullish pattern requires a breakout above the resistance trend line to complete, and if completed, suggests a textbook move of around 165 pips. A breakdown below the support trend line, however, will invalidate this bullish pattern. Starting from this video, I will have a section dedicated to names that have reached 70% or more of their textbook targets. First up is Meta Platforms. This was quite a short coverage. I started coverage on the 1st of November and turned technically bearish on Meta due to the completion of a head and shoulder stop. Meta reached its textbook target of 587.63 on the 18th of November. I was inaccurate though because I expected the gap down over here to first be filled as part of the correction phase of the bearish pattern before resuming the downside. The bearish pattern, however, is now resolved. I still expect Meta to be higher first to fill this gap, and also due to the divergence from the lower Bollinger, which suggests diminishing downside bias. I will no longer be covering Meta Platforms in future videos. Merck Co was another one that is quite successful. I first covered Merck on the 25th of May and highlighted a potential falling wedge, which was completed on the 6th of June. While there have been a few corrective declines since pattern completion, the pattern was not invalidated. Eventually, the textbook target of this falling wedge at 96.78 was reached. I will no longer be covering Merck in future videos. I've also been quite successful on dollar yen since January this year, starting off with a rising wedge that eventually met its textbook target over here at 144.96 in April. I then highlighted the formation of a potential cup and handle bottom, cautioning the potential change in outlook. That was on 21st of June, and it took a while to complete, of course, but eventually met its textbook target at 157.41. I highlighted last week, of course, that dollar yen may be forming another rising wedge, but this bearish pattern was eventually invalidated over here on the 18th of November after price action broke above the resistance trend line. In any case, I expect dollar yen to be directionally lower first due to price action overextending above the upper Bollinger, but I will no longer be covering dollar yen in future videos. I will cease coverage on Chubb. I have identified a potential double top in Chubb, but price action development in the last 3 weeks suggests that this is not a double top. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.